Okay, so usually I cover the 1 year, but I'm going to ignore that because it's not really necessary. I think from the two upwards, 2, 5, 10, and 30, those are the key yields to keep an eye on. So the 2 year made a new high. It's basically been grinding higher highs, higher lows, not really ruined its pattern for several months, I would say. I think we just keep going up. Now, look, we are above 5%. We breached 5% some time ago. It's not the craziest yield. I mean, the 2 years, the one the Fed basically follows. So this guarantees, in my opinion, that the Fed will not cut rates. And I think actually the Fed may even increase rates again one more time. At least a lot of people saying they're going to cut soon or that it's done. Unless you have a banking failure, which I see happening, I don't see why they won't increase because inflation's going up again, right? We've seen the low, the inflation went back down again, and now we've seen it's picking up again. And look, oil's going up, right? Geopolitical tensions, whatever the excuse, oil's going up. So inflation is not coming down. So either rates stay where they are or they go up. But either way, I think the 2 year will continue unless there's a massive crisis. People's just pile into bonds in a safety trade, which hasn't really happened recently. And we have had a bit of right, we've had the Israeli conflict and everything, a couple of other geopolitical tensions. So I think rates just keep going up. Now, the 5 year, it gets even steeper. Look at this. Look at this. This is new high today. Where do we go? 5.2. I drew this ages ago. Okay, it's not that obvious when you're on the daily, but let's just look at the weekly. There you go, very clear, 5.2. So I think we go straight past 5 and go to 5.2. The 2 year, by the way, pretty much already there. It could go a little higher. So 5.3, but the 2 year is going a bit slower than the others. 5 year, yeah, 5.2. 10 year, which basically touched 5% today. Unbelievable stuff. Where do we go? 5.2, maybe a bit higher. And the 30 year, which, I mean, look how steep this is. Where do we go? 5.2/4. So we're all going to 5.2 on the 30, 10, and the 5 year. And, look at it today. Look at this crazy stuff. 30 year, 10 year. Look at this. The whole economy is based on these. This is just going to break the bank, pun intended, banks, mortgage market, commercial real estate, auto loans, student loans, just everything. So the market has a long way down to go as this goes up. So, and by the way, it's not just in America. Let's look at Europe. Okay, it didn't make new highs, but that's coming 1, 2, 3, 4, 5 trading days away. New highs. Europe's probably even more screwed than America. So that's basically Germany. Look at the French, same thing. The Italian, same thing. The Italian banks are not good. None of the banks are good. Look at the Japanese, by the way. I mean, something's going to crack in Japan. That's crazy. Look at the British. They were holding out a bit. Probably tomorrow, new highs on the 10 year. Look at the 30 year. Definitely tomorrow. That's the best close ever. Just look at that chart and it's, on its own. That's beautiful. That is a guaranteed breakout. That's just absolutely technically perfect. It's a perfect picture. This is some Mozart style. So new highs in yields across the Western world. And as that happens, markets down. So that would explain a lot. Let me look at the dollar also. Not that they are totally correlated recently, but I mean the dollar's been on a storm. But look, for me, we lost the ascending. I think it's just overbought. I think it had this nice bounce here, which kind of brought it back into the ascending. But and I said it last time I did my video, I think it was somewhere here, we're still within the ascending, doesn't matter. I still think that we've kind of done a bit too much and we need to come back down again on the dollar, 104.5. So I think we come back down here. I mean, look, we've had fear trades. Look how much gold's gone up, right? I'm going to cover gold soon. And despite gold steaming up, making back all its losses plus some, it's amazing. That's despite the dollar being strong, but dollar has not really picked up with gold. You'd expect the dollar to go up as a fear trade too. So if it doesn't go up with fear, when fear subsides, or even without fear subsiding, I just think it means the dollar needs to come back down again. So I don't know what that means for yields. It may mean nothing. It may be just a coincidence if the dollar goes down with yields. I do actually think they're a bit detached at the moment. I think yields are just doing their own thing. They're just going up, overall. And I think the dollar will come down. So I lump these two sectors together because I typically just put them together. But I do think that the dollar and yields are not totally associated at the moment. And I think the dollar will go down, and I think yields will keep going up. So, and we know what that will mean. Yields going up should send the market down, and the dollar going down should send commodities up. That's my take.